Hey, we're back. We're looking at IWM. That's the ticker symbol, IWM, and this is meant to more or less mimic the Russell 2000. The Russell 2000, if you're unaware, it takes the top 3,000 stocks, the bottom 2,000 of the top 3,000 stocks. And so this gives us an idea of what the um, middle, like medium sized to small cap stocks are doing. And I want to follow this one mainly because it gives us a sense of what those smaller companies are doing. And if we get a sense of what those smaller companies are doing, those companies are the ones that have the higher potential for massive growth. So if we can catch some of those, we could see great profits if we can find some of those. But getting into this one, the last time we checked on them was about 2 weeks ago, March 19th. I have recorded. Back then, the price was 171. It's currently at 173, so not much change has happened. We have the monthly chart on the screen right here. It's a little tiny. We will go over a little bit of the news that's kind of impacting this stock, as well as the technical analysis after the news portion. So stick around for that. Otherwise, um, yeah, this one seems pretty flat. I do have a buy point of 172 and a resistance point of 198. But with that said, what I wanted to point out, similar to VOO, which mimics the S&P 500, these are the holdings of the Russell 2000, so it's very similar. The weights are definitely different, but you can see there's higher weightings in similar industries. We have technology again, healthcare, financial services, and consumer cyclical. The only difference with this one that I'm seeing stand out is the industrials has 15%, where VOO had maybe less than 10%. Not sure the exact number. Actually, yeah, so they had about 8%, and IWM, the Russell 2000, it has a higher proportion in the industrials, double actually, but smaller in technology and um, yeah, so it's very similar overall. But just some of the news that we've come across. So, um, in terms of like recession fears, it looks like this article was taken before the Fed meeting. And so, just some of the insights are people were worried about the Fed potentially uh, what they were going to do in terms of a a rate change, whether 50 basis points or 25 basis points. I believe ultimately they went with 25, but that was some of the concerns going into the meeting. Some of the bearish news on this is that the U.S. Treasury yield, the 2-year Treasury, is way above the 10-year Treasury yield, and that shows an inverse in correlation. And normally, what results is within say 2 quarters on average, I believe, that the market starts to drop and go into a bear run, a very long decline. Doesn't have to be long. I think the average sort of decline in the market as a whole is about 2 or 3 years. So that is something to keep in mind. Outside of that, the other issue with that is uh, with those higher rates, it's it's restricting borrowing, and that's going to lead to smaller companies, companies in the private sector. They're going to have higher mortgage rates and borrowing rates, which ultimately that means it's going to cost more to borrow money, and that just makes it very hard for someone to grow or stay afloat. So that's another concern. The other article I came across was uh, once they actually had the Fed meeting, it was by 25% or 0.25%, I mean. And so now it seems like what people are thinking is when are we going to get into like how much longer will the Fed continue that hawkishness of adding more percents to the current interest rate? It seems like they're very close to just letting it be, and so that's kind of on the one hand, they could continue to ramp it up. On the other, they might stand back. Um, Powell mentions here that while they still did raise the rates further, they were very close to having just no change at all. So that's a lot of investors, such as myself, were optimistic on that because if they kind of put a hold on that, that means we now understand what the borrowing rate's going to be, and as long as they don't reaccelerate that, bump it up higher, we now at least know, okay, this is what it's going to be, and it's going to be that way for uh, who knows how long, but potentially if it reaches the top, that means at some point it's going to start pulling back, and it just gives us kind of like a safety aspect to this. Um, that's pretty much it for this article. And then more recently, the most recent article. So the first quarter of the year sent investors back to the future. So um, a lot of the moves that have been happening in the positive front seem to be revolving around the tech industry. So they list Apple, Amazon, Tesla, Meta, and Nvidia. Those have all been going very strong right now, even with lower than expected revenues and returns. And I have to imagine that's because people are just seeing that Fed slowing down interest rates, possibly dropping them in the future. And so they're looking way down the road as opposed to what are the actual numbers. So they're really going ahead here. Um, Again, similar to another piece that I mentioned is, did I skip it here? Um, where is it? Oh yeah, so similar to before, uh, again, the concerns with these higher interest rates are companies will no longer have access to cheap capital, and because these rates are going to be staying high, that means more smaller companies are likely to fail because if they need to take out more money, they're just not going to have access to it, or if they do have access to it, they're not going to be able to pay on time, and so that's a big concern. So if we're looking at the bigger companies, they should still be okay. While it'll be more expensive for them to borrow money, they still should have plenty of money to continue business. It's those smaller companies that are more likely to suffer because they're just not going to have access to it. Or if they do have access to it, it might be a little too costly for them and they might end up failing. So that's the big concern, especially for the Russell 2000 stocks. So that pretty much covers the news aspect. If we go into the technicals, um, I did end up changing this purple line. I brought it down a little bit. So if we scale this one out, again, this has been an index fund that's been in an uptrend for many years, going back to 2012. That's when we started this pattern. I still think we were in it. The change that I really made was I had this sloping out some, so it was more angled like this, and that was to catch some of these highs. I just wanted to reel that in a little bit just so the lines were a little more parallel, uh, but it does mean we have a lot of potentially overpriced stocks back here in like 2013, 2014, more in like 2018. But if we look at today, that kind of brings us in line with where we are. We had a more recent overpricing in like early to mid, pretty much all of 21 actually. But now we seem to be back within that range. And then what I also did was set up these what appear to be a good time to buy, a fair price to buy, and then what seems like it's going to be a resistance point. And that's those lines in green, blue, and red. And right now it seems like it is kind of trading between our mark at 173 and 198, that green and red line. And right now it happens to be very close to the green line. So if we update our tracker here, and I'll share that with you shortly. So currently it's at 173. I had the a buy point at 172, that green line. The resistance point, that's still going to stay the same. And we are still in that long-term uptrend. Even though we did pull back significantly going into 22, I think that really just pulled back into a reasonable range considering the long-term uptrend that we have marked out in purple. So again, the last time we looked at this was 319. So that was over the weekend back here. It's a little small, but this candle right here, that's the last time we checked. I marked that I should buy this one. I ultimately didn't yet. So fortunately for me, it's still at a good price. Not as good as I could have got, but again, it's just $2, so no big deal. I think I will add to this, or actually start a position in this, because again, it's a well-rounded stock. Sure, it could drop in the future, but because it's so well-rounded, I like the safety of it. And again, I can't ignore the long-term uptrend, so I probably will make it a point to at least buy one share of this tomorrow, if not two, just to start to build out a position in this and let that ride for years to come. But otherwise, that's pretty much it. If we zoom out a little bit, just to make a little more comment, the way it's acting, um, I think what's most likely to occur is it might just start to consolidate between this 173, 186 range. It has exceeded, or at least reached up to 198 a couple times, so it could potentially start to rally and get up to 198. It seems like the stretches where it goes positive, it takes about uh, from takes about 2 months, it looks like, to go from a bottom to a high, about 2 months there, and then it comes back down over the next 2 months, climbs back up for 2 months, down for about a month, up for about 2 months, and here we are down at the bottom again. So assuming that pattern continues, I think we're going to see something over the next month or two where it climbs back up to 186, possibly 198, and then over the next 2 months we might touch back down into another buying opportunity, and hopefully we'd save up some money and be able to do add a share or two as we continue to track this one. But that's it for this. So here's kind of the quick summary. IWM right here, I marked it green because that is um, there's meant to be a green column here, but green is like a time for me to buy. It's at a point that I'd be interested in buying, so I marked it green. No changes here other than it's currently at 173, still keeping that buy point at 172, resistance point at 198, and I added the note that it's in a long-term uptrend. Other than that, share your comments down below. I'd be interested in reading those. Other than that, please like, subscribe, and I'll see you on the next one. Bye.